Hey guys, welcome back. Now, Kevin O'Leary from the hit TV show Shark Tank has been a great person to follow as the crypto market has been developing. He's someone that's seen hundreds of businesses and business models through Shark Tank. He's obsessed with how to make money, and he's also created his own financial products and ETFs. And so for me, he brings a very valuable insight into the world of crypto. And so we'll be catching up with his latest insights, including why he remains a crypto bull and why he has maxed out his crypto allocation. Then O'Leary's warning, as there's one segment of the crypto market that he is just completely sold out of, and he explains why. And then we'll finish up with a bit of a bonus clip. You will hear a price prediction to end all price predictions. You will hear a Bitcoin price prediction so high it just may bring a tear to your eye. As always, if you do enjoy anything in the video, then drop a like. Always appreciated. Okay, first up, Kevin shares what he calls his 4 vectors that are going to send crypto prices soaring and, as he calls it, make him a ton of money. Ready? Let's do this.
Four vectors of policy coming at crypto right now. Let me walk just through the shopping list. So this is also unprecedented. Number one, you got the Loomis bill, and it's mostly positive. I've read it. A lot of positive policy in that. Number two, you've got the executive order from Biden that says we must embrace this and regulate it. Also good news. It could have gone the other way. He could have said we want to make this illegal. Number three, you've got the SEC talking about carbon audits, and I'll get to that in a moment. That just happened last week. And number four, you've got this remarkable situation coming out of BlackRock, the world's largest money manager, decrying and talking about Bitcoin mining and carbon credits not aligning. And I think there's a lot of policy in all of that. But the fact that that's all happening shows you that crypto is never going away. And I think the more it gets regulated, the more institutional assets flow into this asset class. I think the reason we own so much Bitcoin and Ethereum right now and 32 other positions is I believe this sector will be the 12th sector of the S&P, as you pointed out earlier. And I believe that you want diversification. When I own a sector like energy in the S&P, I have no position more than 5%. Well, I have 32 positions on. And my view is simply that Bitcoin is not a coin, it's software. Ethereum's software, Polygon software, Solana software. All of this stuff is software. So I'm just investing in software development that has the potential to provide productivity, and the market will value it based on its scarcity in the case of Bitcoin, or the proposal of economic increase, like a Polygon, reducing fees and friction, and HBAR being used by Boeing for supply chain management. All of these different scenarios. I don't know which one's going to work, but I don't need them all to work. I just need a few to work, and I'm going to make a ton of money. That's the way I look at it.
And so the 4 vectors, the Loomis bill, the president's executive order, the SEC carbon audits, and what's going on with BlackRock. All of which says to him that crypto is never going away. And if you didn't know, Kevin O'Leary started out hating crypto. He then moved to a 1% allocation. He then quickly moved to a 5% allocation. And now he's maxed out his allocation at 20%, which is the maximum he can do through his company. And still today, he gives, for me, the best and most simple explanation of crypto. It's just software. You're just investing in the next generation of software. Love it. Okay, next up, Mr. O'Leary has just completely sold out of one sector of the crypto market due to a recent regulatory update.
Today, and I work in the indexing market where we try and index for institutions. I'll give you an example. If you're a sovereign wealth fund in the Middle East and you want exposure, some of these countries generate $250 million of cash a day, and they want obviously to get diversification. They already have oil, so they want the S&P 500 X energy. And 2 years ago, they started saying, well, we're not allowed to own Bitcoin, but how do we get exposure to Bitcoin volatility? And at that time, the way that was really working was many companies had raised capital in the U.S. markets that were Bitcoin miners, pure miners. They just They were awarded coins. They kept them on their balance sheet. And the theory was that if you owned the equities, you could get exposure in a legitimate way to the volatility. And indeed, if you look at the price of Bitcoin vis-a-vis, let's call an index of some of the popular ones, that would be HUD 8, Marathon, Riot, and Hive, which were very popular to be indexed. They really traded in tandem with Bitcoin. So it worked for a while. But that's why I talked about the four vectors. That correlation is going to fall off pretty quickly now that we have for the first time calls for carbon audits, because most of the public companies in the US that have been used for proxies have been saying, okay, we'll just buy some carbon offsets. And that worked fine. But now that the SEC wants to audit this, you can't find an auditor that's willing to sign off on that ledger, because those stocks are going to get killed when they get their carbon audits started on them, because there's nowhere to go. There's just no way to audit it. And they're not going to get an auditor to sign those statements. It's unfair in some ways. I mean, basically, this is a classic case where the nascent industry started just a few years ago by these great pioneer entrepreneurs. Right. They get shot with all the arrows because the president loves climate change mandates, and so does BlackRock, and so does the SEC now, and so does the Loomis bill. So, I mean, that's unfortunate. But sometimes, the pioneers have to get the arrows so that the ones that come behind them can set up shop.
So he's just completely sold out of his Bitcoin mining stocks. Now, the mining companies were a great way that institutions and investors could get exposure to crypto, but in a regulated way. However, due to new regulation being brought in by the SEC, carbon audits, he thinks that these stocks are going to fall because the auditors won't sign them off. So Bitcoin's ESG problem coming into play here. Okay, and to finish up, now I love a good old price prediction like anybody else, but here we have the price prediction to end all price predictions. Now, in the same debate alongside Kevin O'Leary, they had Roy Niederhofer, a hedge fund manager with $1 billion of assets under management. And he takes the prize for the biggest Bitcoin price prediction I have ever seen. Are you sitting down?
So what I'm going to do right now is make a case that I think is going to make a very reasonable, sensible prediction that we get Bitcoin prices 10, 100, 1,000, and even 10,000 times what the price is right now. Now that sounds probably a little crazy, but let me take you through it. Right now, the inflation rate is about 10%. I think most people would say it's fairly reasonable to think that we could have 10% inflation for another 20 or 30 years. That doesn't sound so out of control. It's also reasonable to think that Bitcoin itself grows from where it is right now. It's about the size of the Thai baht. And if Bitcoin happens to get a little more acceptance and grows to the market cap of the British pound, that's about 5 times what it is right now. You put those together, in 20 years, you have a Bitcoin price 30 times what it is now, in 85 times what it is right now. So we're talking about a Bitcoin price of 3.8 million, even if a very reasonable current assumption holds true. And we can go beyond that. Let's say there's 15% inflation for 30 years, and the Bitcoin market cap rivals that of the euro. We're talking about a Bitcoin price of 56 million. And if Bitcoin becomes the world reserve currency, and we have 20% inflation, the Bitcoin price is going to be almost 500 million. And remember, it's trading at 45,000 approximately right now. So these are edge cases, I admit. You'll probably look at this in 20 years and say, wow, what a silly idea that was to predict that. But I think they are non-zero cases. They are reasonable assumptions to make. And for many other reasons, I think it's a very interesting investment right now.
So, an example where Bitcoin gets to a cool $500 million per Bitcoin. Now, I told you it was big. Okay, let's break down his range. So, with inflation at 10% for 20 years and Bitcoin getting as big as the British pound, this gives a price of $1.4 million. So, kind of feasible. But if there is 20% inflation for 30 years and Bitcoin becomes the world reserve currency, then this gives a price of 500 million per Bitcoin. 500 million per Bitcoin. I mean, what can you say about that? Kevin O'Leary of the hit TV show Shark Tank remains a raging crypto bull and has maxed out his allocation of 20% through his company. He sees all the coming regulation as a very positive sign and says crypto is now here to stay, and he sees it all as just software. He recently sold out of all his Bitcoin mining stocks as he sees the new regulatory update to do with carbon audits are going to wreck the mining sector. And Roy Niederhofer of Niederhofer Capital Management has just stretched everybody's imagination with a scenario where Bitcoin gets to $500 million per Bitcoin. So there you are, guys. Hope you enjoyed. Tell me, what do you think about $500 million Bitcoin? Let me know below. But for now, just to say, if you did enjoy anything in the video, then drop a like. And a big thank you to everyone who does. If you haven't yet subscribed, click below and join us. Got some great videos coming up that you don't want to miss. Okay, cheers guys. Thanks for watching, and I'll see you in the next video. Bye for now.